All right, guys, Big Daddy Powell is about to talk, or has he already started talking, Mo?
Started 3.5 minutes ago.
Okay, so they raised rates a quarter point, which was the least shocking thing in the world to happen since Hillary Clinton won the 2016 election. See what I did there? She didn't win because that was shocking.
I get it.
This was shocking. Tough crowd.
No one fell on deaf ears.
Yeah, so right now, the NASDAQ is down 0.3, the S&P is down 0.16, and the Dow is positive. The first time that rates were raised was March 16th or 13th of 2022. So about 16 months ago. And the stock market is currently above where it was back then, I think.
Really?
Can you double check that?
Yes, I can.
This is what's interesting. The justification for stocks going down was that, stocks going up was that interest rates were low, and that's why stocks went up, because you can justify a higher yield. Now, guys, if you're new to our channel, I'm very active here. We talk about a lot of things, economic, a lot of earnings reports. We're gonna do a video after close today on Meta's earnings report. We did a few this week on Microsoft and Google. I'm also very active on Twitter. So reach out to me. Let me know what you think of this stock, the rates being raised, because it is pretty interesting news. Now, remember, guys, we don't believe that interest rates should drive your long-term thesis on investing. Can it affect the short run? Sure. You know, real estate that we would have bought 6 months ago at a year ago at a different interest rate than today, of course, but that's why we lock in long-term interest rates, and that's why we do work to our properties to make sure that the values go up, where even if interest rates go even higher, then we're fine. But rates right now are at a level that are still 10-year interest rates still below the long-term historical average of 4.5%. We're still only at 3.9. Mo, where were we March of last year?
The close on that March 16th date, that was Wednesday, was 435.62. Today we're at 454.75 on SPY.
So we're higher today.
Yep, much higher today.
Much higher today.
Yep.
Guys, it just doesn't make sense because rates were zero and that was justification for high. Now, our belief is, somebody mentioned to me, a good friend of mine said he read it, that somebody called this an echo boom. Our belief is this is an echo boom. This is a justification, one last push up to sit there and see where can we take this market. AI has been the big thing. I'm glad that Microsoft yesterday said AI will take a long time to come through, but Microsoft's currently down 4.5%. Yep. The googly moogly.
That's what Google's doing. It's
still up 6%. So, you know, both beat on earnings and both beat on revenue. But Microsoft was a little more timid about when their AI bets were going to pay off. Guys, we've been spoiled by low interest rates in the last 15 years. Absolutely spoiled. Even, you know, I look at it going, oh my gosh, I don't want to pay 6.5% for my home mortgage. You know what I mean?
Yeah.
You know, my fiance got a mortgage 2 years ago at 2.625, the literal bottom, 30-year fixed mortgage. And that same mortgage today is 7%, whatever it is today. Yeah, it's insane. So I look at this thinking, okay, you know, we raise interest rates to fight inflation because as the jobs market is strong, it causes less people to be looking for more number of jobs available, which means that business owners have to pay more money, which increase their costs, which they pass on to the consumer, which increase their costs. And that increases the cost of goods, which is inflation, right? That's a 15-year mortgage, and 30-year mortgage is 7.29.
Yep, 7.29 for a 30-year fixed right now.
Guys, we don't want to dwell on these things, but you know, I was wrong 15, 20 years ago when I first started buying real estate. I remember saying back then, the chances of rates being lower 10 years from now are going to be super slim. And it happened, right? And now we're sitting here, and in the last couple of years, I was like, really, what are the chances that rates are this low for a long period of time? Listen, Japan had it. Japan's had low interest rates for a very, very long period of time. Very low, right? So let's see where the markets are at right now. The NASDAQ's still treading. The S&P is basically even. Has Powell said anything? That matters?
Clearly not enough to the market because it's not really swung that much, which is surprising. I suggested that we move this video to 2:30 p.m. versus recording the video at 2 p.m. because usually things move when he speaks, and it's funny to see. Not moving very much.
He did not come out guns a-blazing, is what you're saying?
He must not have. I mean, we'll see what he says, but Doesn't seem like there's anything great. Powell, not your pal. Jesus is coming, Jerome.
Jesus is coming. By the way, if they found aliens, did you see that little thing where they admitted that it was
I did.
Yeah, bio something bodies inside the alien aircraft.
Buy Bitcoin.
Yeah. That was on it was in the Senate.
Footage of this?
Go Being Libertarian Instagram account. Click on it. Anyways. All right, what do we have here? Anything? Nothing from Powell? Usually there's something that all of a sudden it goes like this or it goes like this. It goes one of those two ways when he says something. Did he have a good bowel movement today? What are we doing here? What's up, Romy Rome? That's June.
That's not it.
What's up, Romy Rome?
Let's see here.
Anything? Let me look and see what's going on. Oh boy, people when they say things on Twitter.
This is a quote from him at his press conference. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go.
Wow.
I wonder what that means.
So it's interesting. Has moderated somewhat, even though it was
somewhat
10% or whatever.
Mm-hmm.
Huh.
I really think that he doesn't want to ease up.
He 100% does not want to.
He knows this is. He doesn't want.
I think it's the job market. He needs to slow down the job market.
Yeah.
He absolutely needs, guys, spoiler alert, Jerome Powell does not want 3.6% unemployment. Jerome Powell, a couple months ago in the Senate and House committee, he was being blasted. They said, do you realize your plan will cost people 2 million jobs? And his comment was, high inflation will cost everyone a lot of money. His basically saying jobs being lost is necessary to fight inflation. And this tight labor market, look at him.
Substantially exceeds supply of available workers. The labor market remains very tight.
Like I looked, the other day I saw McDonald's that was offering $14 up to $14 an hour. And I was like, how are they getting people? I literally was shocked. I'm like, there's no way they're getting people. It's incredible. It's absolutely, absolutely incredible. I mean, and by the way, if you own a business out there, you know how hard it's been to find, you go to a restaurant now and they have certain sections closed off, or you go to a restaurant and you say, hey, table for 3, and they go, yeah, we don't have tables available, and half the restaurant's empty. Why? Because they have no employees. And they'll literally get criticized. Well, I see tables there. Yeah, but we only have 2 servers. We only have 3 servers. This is not a random thing that's happening. It's a very common thing. People are changing their hours now so they can have employees at the right hours. It is really, really incredible. How do I look at it on the Twitter machine?
Probably hashtag FOMC, right?
Okay,
there it is right there, FOMC.
Where? Oh, okay.
And then latest.
Oh, latest.
And you can see what people are talking about now.
Let's see here. Jerome said he believes rates are not restrictive. That pretty much means hiking will stop. Maybe. Well, that's in Spanish. Hablo español.
56 days until the next Fed meeting. They have a countdown going already.
Well, that guy's a crypto guy, so I'm not even going to listen to what he has to say.
And right now, the prediction is that we stay. Oh, wait a second here. Yeah, that's it. Okay.
So right now, the prediction is they stay.
Yeah.
Very few changes in the latest FOMC statement. Anything? Boy, this is a pretty boring report.
Yep.
I don't get it.
3.5% of voters think that we're going to move up the next rate increase. I don't know who votes on that. All right. Do we have any other poll quotes?
And the NASDAQ is now 0.26. The S&P is now up 0.3. So things are starting to rally now, guys. So did he say something specific that made it rally? Because literally things are rallying now. It went from down, right before he started speaking, we were down 0.42. Now we're up 0.26 on the NASDAQ. S&P is now up in positive territory for sure, and the Dow is 0.5% up.
We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Interesting.
Very interesting. All right.
We will continue to take a data-dependent approach, so they're just going to continue to follow the data. They've been very consistent in that. All right.
Okay. Well, guys.
Well, to sum it up, for us, I don't really care. Do you?
I mean,
on a grand scale.
No,
I mean, it's going to affect the things that it's going to affect in the short term, and
I think people just focus on it too much because it's right here, right now, and you want to feel like you're making a decision.
Everywhere.
And it's literally everywhere. We're of the belief that if you worry about these small things, it's going to cause you to make decisions that are not smart decisions.
Right.
Literally, if you're a good investor, you should be able to make money in any market in some fashion, or at least not lose capital, right? And if you're buying, I shouldn't, that's kind of a generic statement. The bottom line is a good investor understands how value is made, and they might have to change the way in which they look for value during boom times or bust times, but they'll actually make the best money when things are bad. And we just think things are really, really good right now. Really, really good.
Yep.
So,
I can't wait to see, I guess, some of what Jerome Powell says. He's always going to say the same things pretty much over and over. But when the other Fed presidents start giving their individual comments, probably starting tomorrow on the morning shows, that'll be pretty interesting. See who thinks we're going in which direction.
Breaking news.
Yes.
Breaking news. 2-year treasuries have reached the 5% level twice and both times failed to stay above it.
I will say I am excited for the 90-day treasuries to probably continue to climb a little more. I think they were at 5.4.
Yeah, I saw 5.4 recently,
So
but
now
I don't look very often.
Now we're going to go higher.
What's it at now?
Let me check. Let's see here. Bloomberg. 5.42.
Ooh-wee. Guys, keep in mind, just 2 years ago, a year and a half ago, that was 0.06. It is up almost 100 times. It's up 90 times in the last. That's just, you got at some point, and this is why I think stocks can't justify high valuations, because at that point, you might sit there and go, wait a second, I can make 5.42% in 90 days. What's the 1-year treasury? Tell me that one. 12 months is 5.38. So if I can give my money to the government, is way more secure than putting it in a company and make 5.38, what return do I need to make to justify buying an equity? And this is where I think there's a disconnect in stock prices, because people aren't factoring that in. They aren't realizing they can make 5.5% almost by staying in cash. And there's very, very little risk on the 3 month, 6 month, 12. As long as you keep it to fruition, you will get your principal back and your interest as long as the U.S. government stays solvent. And if you don't think the U.S. government's staying solvent, then why do you even have a TV or a computer? Or why are you even watching this? You should be in guns and farmland and stocking up your food. I'm kind of being facetious about that, but I literally look at it going, I don't understand why people worry about this stuff. We are very big as a channel on be calm, don't make decisions based on short-term market movements, don't even pay attention to the media. Don't pay attention to it at all. Just find good companies at great prices, and if they go lower and the companies are still basically the same, then buy some more. And you will do very, very well over the long haul, right? By the way, I saw some things recently on Twitter where people were showing the graph where it's when the Fed cuts rates that stocks fall. I was like, oh, I have no idea. Maybe that was because it was in response to recessions. I have no idea. But guys, the yield curve's inverted, which means the 2-year treasury is higher than the 10-year treasury rate, which means that people perceive more risk in the short run than the long run, which in history has shown we're in a recession. Now, recessions don't get called for a long time, and it's hard to see a recession when you see such low unemployment numbers. But remember, it has to be low before it goes higher. Whatever plays out, plays out. We just make our decisions based on valuation, and right now a lot of things are very overvalued again. And we're almost at all-time highs again. We're within 10% of all-time highs in the S&P. I think we're at 5% actually.
Nice.
Right?
I don't know.
Well, go look at SPY. Let's pull up SPY. That's the S&P 500 ETF. And the all-time high is 479.98, and it's currently 456. So we're $24 away, which is almost 5%. It's like 5.5%.
Wow.
Okay.
Yeah.
That's that. All right, guys, subscribe to the channel. Follow me on the Twitter machine, because I really get very active in here. Say hi to me. I'm very active, as you can see. I've only been a member for 16 months, and I have 1,431 tweets. So, yeah, thanks very much, and subscribe to the channel. We'll see you then. Bye.